Welcome to the Tuesday edition of the Tech Stocks Daily Podcast. Today we're diving into the buzzing world of NASDAQ-traded tech titans. From Microsoft's game-changing Phi 3 Mini AI model making AI more accessible and cost-effective, to Spotify's financial symphony that's music to investors' ears, we've got the beats and bytes that matter. Apple's strategic dance through analyst endorsements and potentially transforming global sports broadcasting, to Meta Platforms' ambitious leap into artificial intelligence just before its earnings report, we're covering all angles. Plus a peek into the overall market sentiment, showing a harmonious blend of optimism and strategic foresight. Stick with us. It's a roller coaster ride through innovation, strategic maneuvers, and booming tech landscapes you won't want to miss. Microsoft has once again made headlines with its innovative leap into the future of artificial intelligence. Tuesday marked the introduction of its newest contribution to the AI domain, the lightweight artificial intelligence model known as Phi 3 Mini. This development is noteworthy not only for its technological advancements, but also for its economic implications, setting the stage for widespread adaptation across varied sectors. Phi 3 Mini emerges at a critical junction where the adoption of AI tools is seen as pivotal for the digital transformation of industries. What sets Phi 3 Mini apart is its design as a small language model, optimized to handle simpler tasks efficiently, yet offering a cost-effective solution. Sebastian Bubeck, Microsoft's Vice President of Gen AI Research, highlighted the model's financial advantage, stating an astoundingly 10x cost difference compared to counterparts with similar capabilities. This dramatic reduction in AI adoption costs could democratize AI technologies, enabling even small and medium enterprises with limited resources to leverage the power of AI. The timing of Phi 3 Mini's launch aligns with Microsoft's broader commitment to leading the AI revolution. It is evident in its strategic moves, including a significant $1.5 billion investment in the UAE-based AI firm G42 and partnerships aimed at enhancing AI access through its Azure cloud computing platform. Microsoft's dedication to AI is part of a broader vision that anticipates the transformative impact of these technologies across global work paradigms. Phi 3 Mini is readily available on Microsoft's Azure AI model catalog and also through Hugging Face, an AI community and platform, and Olama, catering to local machine operations. This accessibility underscores Microsoft's intent to facilitate easy integration of Phi 3 Mini into various operations, making AI tools more ubiquitous. Aside from its product launches and partnerships, Microsoft announced strategic collaboration with Hexagon to redefine manufacturing with cloud technology. This partnership seeks to integrate the realms of engineering and manufacturing through cloud-accelerated AI and simulation, bolstering productivity and innovation in the manufacturing sector. In another significant move, technology advisory firm AAPL solidified its commitment to Microsoft's cloud services through the acquisition of Cloudera's, enhancing support for the Microsoft technology stack among its clientele. This is a testament to the increasing reliance and trust in Microsoft's cloud and AI capabilities in reshaping business operations and strategies. These advancements and strategic partnerships are not just isolated efforts, but part of Microsoft's grand scheme to anchor itself at the core of global AI and cloud technology evolution. By marrying innovation with utility and cost-effectiveness, Microsoft is not just selling a product, it's offering a pathway to the future. A future where AI integration becomes as common as using the internet, redefining the way businesses operate and how solutions are designed across industries. Today in the tech world, the spotlight shines brightly on Spotify, a giant in the audio streaming platform arena. These folks have not just hit, but knocked it out of the park with their first quarter financial roller coaster ride that soared way beyond any Wall Street expectations. Let's unravel the symphony Spotify played that's got everyone tuning in. First off, let's talk growth. Spotify announced a whopping 20% increase in its revenue, bringing it to a grand total of 3.64 billion euros. Yes, you heard it right. This musical behemoth has not only tuned its strings to the melody of success, but also managed to trump estimates which pegged them at a slightly more modest 3.61 billion euros. But wait, there's a crescendo. Their net profit hit an upbeat of 97 euro cents per share, dramatically upstaging the forecasted 65 euro cents. This financial tune has certainly got investors and spectators alike snapping their fingers to the rhythm. Now, let's not overlook the maestro's move that contributed significantly to this harmony: cost-cutting initiatives. Amidst a challenging previous year peppered with layoffs and some tough strategic decisions, Spotify's notable cost efficiency underscored an impressive increase in their gross margin to 27.6%. Clearly, trimming the fat has enabled this streaming pioneer to keep its financial health in the pink. On the growth of its subscriber base, Spotify now boasts 615 million monthly active users, mirroring a solid 19% year-over-year escalation. While this symphony did slightly miss the expected note of 618 million users, the tune remains largely unaffected owing to its formidable 14% rise in premium subscribers, now at 239 million. Spotify's strategic restraint in marketing activity, also a move to curtail expenses, might have contributed to not hitting the highest note, yet the growth tempo remains dynamic and promising. Adding a layer of intrigue to Spotify's recent achievements, the European Union chimed in, backing the streaming champion in its legal face-off against Apple over competition in the music streaming arena, shining the spotlight on Spotify's advocacy for fair play in the digital music ecosystem. This twist in the tale represents not only a triumph in the courtroom, but underscores Spotify's intent and ability to navigate through the complex melodrama of tech policies and legislation. Finally, the future chorus sounds sweet for Spotify as it orchestrates an acquisition of 16 million new monthly active users in the next quarter, while setting the stage for further revenue crescendo and margin amplification. So, as the curtain falls on Spotify's first quarter show, a standing ovation is in order for this tech titan. Their performance, akin to a well-composed symphony, resonates the echoes of strategic savvy, resilience, and a forward-marching beat towards not just surviving but thriving in the competitive tech tempo. This act, folks, is why Spotify found its cadence in today's headlines. Today, in the bustling world of tech, Apple grabbed headlines for a trio of intriguing reasons, highlighting the company's innovative ambitions and financial maneuvers as it steers through the choppy waters of tech enthusiasm, market expectations, and global sports broadcasting. Let's dive into the swirl of events that put Apple in today's spotlight. First off, Apple found a vocal advocate in BofA Securities analyst Wamsi Mohan, who didn't just throw his weight behind the tech giant, but labeled it a top stock pick for 2024. With a buoyant price objective pegged at $225, offering a potential upside of 36.4%, Mohan spotlighted 4 catalysts that could feed Apple's growth engine: a ripe iPhone upgrade cycle banking on Gen AI features, a bullish outlook on the service's revenue growth, superior margins due to internally developed silicon implementation, and the continued allure of Apple's capital return program. Despite a cautious note on possibly lower guidance for upcoming quarters, Mohan's analysis predicted strong services revenue growth, possibly buoyed by sales of the much-anticipated Vision Pro in due course. Apple's financial narrative unraveled further with Morgan Stanley's Eric Woodring sharing his insights, albeit with a tempered optimism. While he anticipates Apple to outperform sales and earnings expectations for the second quarter, he hints at a potential 4% guidance below Wall Street's forecasts for the coming quarter. Factors such as dampening iPhone sales in China and a lack of a flagship generative AI product exacerbated concerns. However, Woodring advised a strategic patience, suggesting a post-earnings buy strategy could benefit investors, especially if Apple wades into AI enhancements in its upcoming releases. Perhaps the most compelling and surprising piece of news is Apple's speculated foray into global soccer broadcasting, with a potential partnership with FIFA. This unexpected pivot into sports underscores Apple's ambition to widen its streaming content repertoire and deepen its engagement with global audiences. According to reports, Apple might secure the rights to a World Cup-style tournament, marking a monumental step as FIFA considers entrusting a single global contract for broadcasting rights. This move, following the company's prior $2.5 billion deal for Major League Soccer streaming rights, signals Apple's growing influence in marrying technology with sports entertainment, although it raises questions about accessibility for non-Apple TV Plus subscribers. In essence, Apple's dance through today's news cycle unfolds a narrative of strategic ambition, with eyes set on catalyzing growth through innovation, enhancing service offerings, and making surprising leaps into new domains such as global sports broadcasting. Each move, whether in the financial markets or through corporate strategy shifts, reflects Apple's unwavering pursuit of diversification and dominance in the ever-evolving tech landscape. All right, let's dive into why Meta Platforms, ticked under NASDAQ, Meta, was making headlines today. It's time to wrap all of this info up, so let's get to it. With its Q1 earnings report just around the corner on April 24th, everyone's eyes are on Meta Platforms. Analysts and investors alike are buzzing with expectations. Analysts are forecasting a first quarter revenue of $36.16 billion, a notable jump from last year's $28.65 billion in the same quarter. Not just that, but there's also a predicted earnings per share increase to $4.32, up from last year's $2.20. Given Meta's history of surpassing revenue estimates in 6 consecutive quarters and beating earnings per share estimates for 4 straight quarters, the stakes and expectations are high. Now, here's where the plot thickens. Folks, Meta isn't just in the news for its anticipated earnings report. The whispers of its ventures into artificial intelligence have stirred quite the interest. The company has rolled out Meta AI version 2, enabling users to pose questions to the AI assistant on WhatsApp and Messenger, as well as enhancing Facebook and Instagram's content with AI-driven information. This step towards AI not only showcases Meta's continuous innovation, but marks a monumental move towards incorporating generative AI experiences for its users, with Meta potentially being a first mover in this area. The financial wizardry aside, the firm's strides in AI signal a substantial investment phase, hinting at increased capital expenditures in data centers and GPUs to support these new capabilities. Furthermore, a significant emphasis is on Meta's AI's potential to shake up the search query landscape. If successful, this could present a new monetization avenue through more personalized advertisement opportunities based on enhanced data capture through AI interaction. What makes Meta's journey even more compelling is its resilience and tactical pivots amidst evolving digital landscapes. The company's notable uptick in market valuation, re-entering the trillion-dollar club, mirrors investor confidence in Meta's strategic ventures, especially in AI and its established ad business mingling with e-commerce from China. Additionally, partnerships and regulatory dynamics, notably the U.S. House's stance on TikTok, could potentially reroute social media traffic back to Meta's platforms, enhancing its advertisement revenue. From an investor's standpoint, Meta Platforms' portrait is painted with both caution and enthusiasm. While some financial analysts remain marginally cautious about the immediate future, citing European regulations and competitive crescendos, others highlight Meta's strong positioning to redefine user engagement and ads monetization with AI's magic wand. With this mixed bag of strategic maneuvers, financial performance expectations, and AI innovations, Meta Platforms embarks on a captivating path that could redefine its market prowess and user engagement paradigms. But the question remains, how will these plans unfold in the coming quarters, and will Meta's bold strides in AI fortify its position as a tech titan? So, what do you all think about Meta's ambitious leap into artificial intelligence and its potential effects on its financial and market footing? Are we looking at the dawn of a new era for Meta and digital engagement at large? Leave your comments and thoughts below. Let's get the conversation going. The overall market sentiment today exudes a robust blend of optimism and cautious anticipation across the tech landscape, particularly within the NASDAQ-traded giants, Microsoft, Spotify, Apple, and Meta Platforms. Starting with Microsoft, the unveiling of its lightweight artificial intelligence model, Phi 3 Mini, underscores a palpable excitement surrounding the integration and accessibility of AI technologies. The company's ambitious strides in enhancing AI access, partnerships, and strategic investments signal a strong belief in AI's transformative potential across industries. This optimism is further buoyed by Microsoft's initiatives to make AI technologies more cost-effective and broadly available, aiming to democratize the benefits of digital transformation. Spotify, on another note, delivered a symphony of success with its financial performance exceeding Wall Street expectations. The emphasis on cost-cutting initiatives translating into a stronger-than-expected net profit amplifies a sentiment of strategic resilience and operational excellence. The company's significant subscriber growth and its victorious stance in policy advocacy reflect a confident outlook towards sustained growth and a competitive edge in the digital content market. Apple revealed a dichotomy of investor confidence and market anticipation. The analyst endorsements highlighting the potential catalyzers of growth amidst cautions over near-term guidance express a nuanced sentiment. Simultaneously, Apple's explorative moves into global sports broadcasting with an eye on FIFA partnerships portray an ambitious bid to diversify and deepen its engagement channels, adding layers of speculative optimism about its evolving content strategy. Meta Platforms, poised on the cusp of its earnings report, evokes a sentiment of eager anticipation tied to its financial and operational metrics, forecasted to mark significant year-over-year improvements. The hysteria around Meta's ventures into artificial intelligence and the potential to redefine digital engagement through AI underscores an innovative momentum. However, this enthusiasm is carefully tempered by analyst caution over factors like regulatory environments and competitive dynamics, illustrating a complex sentiment that balances optimism with a strategic hedging against anticipated challenges. Collectively, these reflections reveal an overarching market sentiment today that is vigorously upbeat, marked by strategic optimism toward technological advancements, financial resilience, and diversification of services. Yet it's delicately balanced with a conscientious awareness of both operational challenges and macroeconomic uncertainties, weaving a narrative of cautious confidence in the tech sector's trajectory. Focusing on Microsoft and the unveiling of its lightweight artificial intelligence model, Phi 3 Mini, I'd lean towards a buy stance on MSFT stock, based purely on the innovative strides and potential market implications outlined today. Here's why. Innovation and market impact. The introduction of Phi 3 Mini suggests Microsoft is not just innovating for innovation's sake, but is keenly addressing the market's need for more accessible and cost-effective AI solutions. By offering a solution that's reportedly 10x more cost-efficient than similar models, Microsoft is positioning itself as a leader in democratizing AI technology. For businesses of all sizes, especially small and medium enterprises with tighter budgets, this could be game-changing, potentially expanding Microsoft's customer base and driving higher usage of its Azure cloud platform. Strategic investments and partnerships. Beyond product innovation, Microsoft's hefty investment in UAE-based AI firm G42 and its various partnerships aimed at enhancing AI access across industries signal a broad and strategic commitment to cementing its leadership in the AI space. These moves suggest a blueprint for long-term growth, one that could significantly affect Microsoft's bottom line positively as these investments and partnerships bear fruit. Market position. Microsoft's constant efforts to anchor itself at the core of AI and cloud technology evolution reflect a company that's both shaping and ahead of market trends. With cloud computing and AI technologies set to dominate the future landscape of computing, Microsoft's aggressive push into these areas points to a company positioning for future relevance and market dominance. However, it's crucial for listeners to do their own research. While the news today paints a bullish picture for Microsoft, especially with its advancements in AI, investors should consider other factors such as the company's overall financial health, potential market risks, and how global economic conditions could impact tech stocks. Evaluate how this fits within your overall investment strategy, your risk tolerance, and your portfolio diversification. Remember, investing in the stock market always comes with a level of risk, and it's imperative to make informed decisions based on comprehensive research and analysis. Wrapping up today's tech market activity, we're witnessing a vibrant blend of optimism, strategic shifts, and pure innovation within the tech giants of NASDAQ. Microsoft's leap into democratizing AI with Phi 3 Mini, Spotify's harmonious financial crescendo, Apple's strategic dance in and out of new realms like sports broadcasting, alongside Meta's ambitious AI tangos, all paint a picture of relentless pursuit towards growth, diversification, and technological pioneering. The sector's buoyancy today signals not just a redefinition of services and product offerings, but underscores the dynamic resilience and visionary ethos guiding these tech titans. The upbeat market sentiments, catalyzed by groundbreaking innovations and strategic maneuvers, augur well for not only these companies but for the broader tech ecosystem. Each move today, be it in fostering more accessible AI or tapping into uncharted market territories, reinforces the sector's potent mix of innovation with practical, strategic expansion. As we keenly observe these developments, it's clear that staying informed on these tech narratives is more essential than ever for understanding the future contours of our digital world. Let us know what you think of today's tech unfolding. Your insights always add depth to the conversation. Don't forget to like, subscribe, and share this video to keep the tech conversation alive. Join us again tomorrow for another roundup of the latest and most impactful tech news, ensuring you stay informed and ahead of the curve in this fast-paced tech landscape.